W-7. It takes 6 to 8 weeks to process, so I have to tell you, 6 to 8 weeks is a long time. Okay, the 10% is held, even if the seller is declaring a loss or no gain. The seller will need to bring in the difference to cover this 10% and deposit it with a settlement agent. And I always tell my escrow officers, please be sure you update your estimate for the seller side. Don't assume that the seller has enough money to cover it. Okay? And you need to be aware of one more thing. It's called a short sale transaction. Now I know short sale transactions are probably not very prevalent in this area, but I have places, I have areas that we're still doing short sales, and there may not be enough money to cover. Because the foreign seller, even though they're doing a short sale, still has to pay that 10%. And unless they have figured it into the net sheet for the lenders that they're going to pay off, he's going to have to bring in the money. Okay, how do we get around this? First of all, the seller can submit to the IRS form a reduced withholding. Oh, sorry. And it's called the 8288B form. This can also take months. Then I have to let you know that the IRS is going to reject it if they don't have the TIN number for the seller. So you have to get that TIN number, no matter what. Okay? Secondly, the buyer can sign an affidavit, you all know that, that the property is less than $300,000, right? And that they're going to live on the property, what is it, 50% of the first 2 years? But I have to caution you that there is unacceptable risk for your buyer when they sign this affidavit. Because really, they are signing this affidavit just as an accommodation for your seller and his problems with the withholding. So why is a buyer going to get in the middle of this? If I were the buyer, I would sign it. I don't care. I don't want to sign that. Because I don't want the IRS coming up at me. What if I don't stay there for those 2 years? Okay. The other way of doing it is the transfer of the property from an individual seller with a problem, withholding problem, to their U.S. domestic stock corporation, which is formed under Section 1445. Now, if the seller wants to do that, they got to get their legal counsel. And I've had this question asked of me. Oh, Juliana, I've just entered escrow. I just have a contract. The seller wants to, because he's a foreigner, he wants to transfer this right now to his corporation. Can we do it through you so he doesn't have it? I says, no, you cannot do it through me. You have your seller transfer the property to this domestic corporation, and then you redo the purchase contract under this seller as the seller is a domestic corporation. Have the buyer sign it and enter escrow. Don't do it through escrow, because that is a trail. The seller is trying to avoid these taxes. And escrow really should not get involved in this, because that places a liability on it. So if the seller wants to do this in advance before it even opens escrow or even goes into a purchase contract situation. Okay, so what we do as a settlement agent is, on behalf of the buyer, we will remit the forms and the money to the IRS within 20 days after the day of closing. I don't have a whole lot of time. 20 days after day of closing, I will send in the 8288 and the 8288A to the IRS. On it, it will have the buyer's name and address and the buyer's TIN number as the withholding agent. And there's going to be also the seller's address and the TIN number. Okay, because you know that if they don't have that, it's not going to go well for the seller. All right then. Yeah. The penalty of withholding. We all know the FIFA account. The penalty for withholding is 25%. The penalty for late withholding is 25%.
For a year?
No, for that withholding. And of course, it's going to be charged to the withholding agent, which is the buyer. Now, what does happen after that? The foreign seller is going to file his income tax return at the end of the year to get this money back. If he paid too much money, then obviously they're going to go ahead and refund him the money, now that they have a TIN number. And if they don't, well, then his tax accountant will probably have to work with him. They will file it, they'll give the 8288, which is, there's a copy of it, to the IRS, to the accountant, and the IRS will file it. So what is my next one? Oh, yeah. So, go back here. These forms are all in your packet, so you can take a look at it. The 8288 form, the 8288A, which we send in the money, and the 8288B, which is the application for the withholding. Now, you can do this application. You remember, it takes sometimes I've heard it take up to 3 to 6 months. And you have to have a tax ID number. Okay. Now, if you have any further questions, of course, this is the number to call. I have a couple of things I want to bring up right now. And one is the qualified substitute declaration of possession of transferor's affidavit. You guys all know the CAR. Some escrow officers don't sign it. I'll tell you this. I personally think that this form, the seller's affidavit, I don't know if you can see it, seller's affidavit of non-foreign status, a CAR form, is really your responsibility as the listing agent to get it signed. You really should be getting it done. But when it goes through escrow, when we open escrow, we have our own seller's FERPTA form that the seller has to sign. So if I get my form in and your broker asks that I go ahead and sign this qualified substitute of declaration, I will sign it because it says that under penalty of perjury, I state that I am in possession of the transfer's affidavit for each transfer. So I will sign it. Other escrow officers may not. It's a management decision. So don't yell at them. Just talk to the manager. No, just kidding. Okay. Another thing that I wanted to point out to you is that what if you have a seller or a husband and wife? One of them has permanent residence, and one doesn't. Well, according to the IRS rules, and this is on their IRS publication 519, a non-resident spouse can claim to file income taxes and so forth under the resident spouse. So, when I have a seller, one is a resident with a tax ID number and one who is not, I make the one who is not go ahead and sign the form, and then when I ask for her tax ID number or social security number, I will ask them to put down there that they are a non-resident spouse treated as a resident, because the husband or the wife is a resident, so they can file taxes like that. Now, what happens if both foreigners, husband and wife, don't have a tax ID number? I was told by a CPA, now you need to confirm this all, that they each, in that case, and there's a withholding of 10%, that they each have to get their own tax ID number, and they have to file their own income taxes, because they are both non-residents. The things you learn.
You mean two separate income tax returns?
Yeah.
Not as a couple.
Not as a couple. That's what I heard from the CPA, because I asked them, why did you have to go and get two? Just one is not. He says, no, when you've got two foreigners, husband and wife, they both have to get it. So I had to split that 10%, 50-50. 18288A for the wife, 18288A for the husband.
We were talking about when you send the money to the IRS.
Yeah.
They withhold 10%. But by the end of the year, when they file tax return, they can file
I think they have to file the income taxes separately.
well, their income's joint.
This is what the CPA tells me. Yeah, I says, why are they going through all this? Wouldn't it help? So, anyway, do you have any questions now?
Well, the sales tax is supposed to be paid by the seller, but it is the buyer who should pay the tax instead of
The
seller.
buyer, the seller pays the taxes. It is the seller from his net proceeds. But it's the buyer's responsibility to make sure that the seller has done the withholding.
Withholding.
They're withholding. They're withholding to pay the 10%.
But the buyer does not have to provide money. It's the seller has to
That's
provide
right.
money.
The buyer does not provide the money. It's the seller who provides the money. But if anything goes wrong, it is the buyer's responsibility.
Interesting.
Yeah,
The
interesting.
other thing is, can people apply for the ID before they do any purchase? Can a foreigner?
I asked my accountant. He says, well, yes and no. What kind of a question? What kind of an answer is that? My suggestion is you tell the CPA that you need to file for a tax ID number because they want to declare taxes on this income property or this property that they buy at the end of the year. So they'll give them a tax ID number, I'm sure.
Because it takes months to get the number.
Yeah, it takes months. You don't
So-
want to wait until they're going to sell the property.
So it's
You
better.
actually, want to wait. You want to do it once they buy the property, once they start the investment in the U.S.
So you get a number, but they don't have to use it
They don't
until
have
you
to use
need
it,
it.
right. Yes. Go ahead.
Okay, what happens if the owner is a foreigner, they purchase income property tax or property and they never file the tax ID number, they never file tax return,
Well-
and then they want to sell for up to several years, what's going to happen?
They file the income tax set. If there is nothing there, okay, the question, I'm sorry, for those of you who couldn't hear. What happens if the foreign seller does not file any income taxes throughout the years he's owned the property and will only file it when he sells the property? Well, what will the IRS do? If there was nothing to file, I guess, income taxes, because they don't have income in the U.S., they'll take that final tax return.
Final tax is like the year they file.
They file because they sold it. So let's say you lived on the property for 3 years, 4 years. You didn't file income tax return. But now you're going to sell the property. Now you have to file the income tax return.
What about the property? It's income property.
If it's an income property and you don't file the tax return, you could have a little bit of a problem. Yeah. I would think, I'm not a CPA, but lordy, you know, my CPA tries to keep me on the, if you make income, you gotta file. You had a question.
If the foreigner bought a property and the wife is resident here, green card holder, but the wife's name is not on the property, before they sell it, can they add the wife's name on the property?
Yeah, you can add the wife's name on the property. The question of it here is that if the foreigner owns a property, he doesn't have an income, he doesn't have a tax ID number, but his wife does. But his wife is not on the property. Can you add the wife onto the property before we close escrow so that the taxes will go through her? Yeah, you can. I would recommend you get that done before you enter the escrow, so that so that the escrow company knows that, okay, now we do have a person who can declare, who has a tax ID number. Instead of doing just like that U.S. domestic stock thing, get it done, have all this prepared for your clients before they go into escrow. The wife has one, the husband does not. Do it before, so everything is set.
So if the wife get onto the title, they can sell just like residence here.
Yeah, that's right. Yeah. Anybody else?
So there's also a state income tax withhold of 3.33%.
That's my next one. That's my next one. I'll do that in just a minute before, okay, just 2 more questions then. Yes.
Does it have to be coupled if it's a joint tenant, property whole ownership, and then the daughter have the green card, but the mother does not have it, but they both their name is on the property?
Oh,
the
no.
daughter can the tax?
If the daughter, it's a mother and daughter situation, the mother doesn't have it, the daughter has it. Sorry. The mother has to get a tax ID, or not her share, her share of it, 10% has to go. Okay, there was one more question here.
What happens if the buyer and the seller are both are foreigner?
Oh, yeah, that happened to me. That one I was telling you about with the 980,000. Yeah.